on to today's Q&A and also silver asset of the day. The first question today, it comes from Fariola, and this is with regard to when you're trading gold, what do you need to look at with respect to correlations in the market to get a good sense of where the price direction will be heading next. So there are several correlations that I would suggest you should have on your radar when you're trading both gold and silver as well. So I've mentioned this many times before, but the gold to silver ratio is very important to keep an eye on. At the moment, the gold to silver ratio is trading around 85.8 to 1. In fact, it's slightly up on the day, which does suggest that for today, gold is going to outperform silver. Now, as many of you are aware who watched our report last week and commented actually on that particular update of silver asset of the day, we were buying silver under $17 per ounce last week on the very first day of October, and we saw that start of the month and start of the quarter buying come back into the market for silver. In fact, silver currently trading around $17 and around 55 cents per ounce at the moment. So we're up around 55 points in that trade currently, but we're going to keep that position on. We are looking for higher prices with silver over the course of this week, and very much like gold, both gold and silver, they tend to put in their lows during Monday and Tuesday before the London session. This is normally where you get the dip in prices that occur with the cycles of the week and then springboarding higher later on in the week as well. You also definitely want to be aware of major news items. So for example, on Friday last week, we had the non-farm payroll data. We also had Jerome Powell speaking later on in the session on Friday as well, which certainly gave some volatility to both gold and silver. So what do we have coming up at the moment? Well, later on today, we have Jerome Powell speaking. That's at 6:50 London time. And on Wednesday, we have the minutes of the FOMC as well. So you want to keep a very close eye on those major news items. They can be big catalysts. What else should you be watching? Well, definitely you want to be watching the US dollar index. So gold and silver, the way they're priced on most platforms, XAU US dollar or XAG US dollar for silver, or just directly gold and silver, you're going to be trading them against the dollar. So therefore, when the dollar is breaking out, it will put pressure on gold and silver. We saw that yesterday. The dollar was gaining some strength. Both gold and silver priced in dollars sold off. And when the US dollar index is selling off, gold and silver will often be able to gain momentum to the upside. You also want to watch out for the S&P 500 and Dow Jones and equities here as well. So for example, what we've seen today is the S&P 500 is under pressure at the moment. The dollar has pulled back a bit this morning as well, and as such we're seeing capital flow back in to both gold and silver today, again being treated as the safe haven. And with respect to the trade negotiations later on this week between the US and China, there's been some negative narratives that have come out overnight, which again, they're providing a bit more support here to gold, and we're seeing that uptick at the moment, both gold and silver. You also want to pay attention to key magnetic levels as well. So silver, we've seen a lot of buying again around that 17 US dollar per ounce level. That's a very key zone that I covered again in detail on our week ahead report at the weekend for gold, silver and crude oil. That $17 level is a great zone to look at buy opportunities on. And of course gold, it's already back above 1500, and we've been building our positions again this week below 1,500 US dollars per ounce. So those are some tips for how you can capitalize and trade gold and look at the correlations as well. The next question we have today is from Lincoln, and this is with respect to silver. What are we targeting in terms of the next major levels? Well, as I mentioned with silver, we've been buying in below $17 per ounce. In fact, at these zones right now, we are starting to see silver climb above $17.60 per ounce at the moment. The next really key magnetic level for silver is going to be $18. And if you can break and close above $18, then really we're going to start marching towards $18.50 and then back towards the swing highs of $19. Now, normally the month of October, from a cycle point of view and a seasonal point of view, is supportive for the metals, but they tend to be range bound to upwards. We're really expecting the much larger moves to start occurring from November and December onwards. So over this month of October, we're looking for range bound trade to capitalize on buying in on these dips in price and then taking profits, some profits off the table each time we're breaking out to the perceived resistance and upper range over the course of the week. And then again, utilizing this consistent range bound trade in order to really capitalize on these moves just week to week. And then when we do have the eventual breakout to the upside, which we are anticipating, we will have exposure to that as well, to the long side. And we are looking certainly for higher prices of silver over this quarter. Our final question today comes from Ariola, and that's with regard to the positioning from hedge funds and money managers in the latest week. And I would say this is a great question because it's been very interesting. In both gold positions and silver positions, we have seen a fairly significant reduction in net long positions in the latest week. However, As I mentioned previously, this is very common to get this end of quarter profit taking. That's exactly what we saw last week with the significant decline in silver prices and also gold, where we've capitalized on this and in fact bought back in on these dips in price. Now, what we saw from Wednesday onwards is this springboard back for silver, back above $17.50, and for gold, managing to rally up 600 points off the lows where it tapped 1,459 US dollars per ounce on Tuesday. Then by the end of the week on Thursday, we broke out to $1,519, which tells me that funds have bought back in. So they've taken their profit off the table, end of quarter, end of the month. We saw a large acceleration in price action to the downside on the Monday through to the Tuesday, and that significant buyback on Tuesday through to Wednesday, where both gold and silver have been propelled higher. So it's going to be very interesting to view the positioning from hedge funds and money managers at the end of this week, where I suspect we've seen a fairly sizable increase again to the long side and a buyback, which has definitely been very visible with the price action and the breakout that we've seen to the upside over the last week. The last question we have today is from Alex, and this is with respect to China now back from their 1 week long national holiday and what impact this might have on prices this week. So as you may have noticed, over the last week, we have seen lackluster price action, especially for the metals over the course of the Asia Pacific session. So really from Tuesday onwards, from tonight and the Asia Pacific onwards, I would expect that volatility and volume to come back into the market. And certainly if you're trading within that time zone, absolutely you're going to see an uptick in price action again with China back from their national 1 week holiday. So with that, that has been gold and silver asset of the day. Thanks again for all of your questions, and we wish you good trading.